Well, thank you so much for coming today. And of course, I always like to start my events, let's play central banks. Because this, of course, is what they do, and this is supposed to be money. But we all know this isn't really money. And the more of this that they do, the less value it has. This, my friends, is money. So, they want us to believe when we look at the spot market that that's what the value of gold and silver are. But that's just a paper contract. And you can see what happened during the great financial crisis. That very top one is spot gold. And the next one are gold stocks, gold mining stocks. And the bottom one are these collectible coins. And you can see that as the other two paper markets that they can flood with as much paper as they want, you see how they behaved as compared to the physical market. And we're seeing that happen again right now too. So looking at gold, physical gold in your possession that runs no counterparty risk should be part of everybody's portfolio and is a true diversifier. Because if all you can do is convert your wealth into this, and this goes away completely, and people stop thinking about it and accepting it as a tool of barter, you have nothing. Now, what we know is that governments must suppress the price of gold, because a rising gold price is an indication of a failing currency. And if you actually understand that that currency is failing, you make different choices and you get out of the system. They don't want you to do that. But ultimately, they definitely do come together. This is just foreign exchange. The black market is a more accurate market because that actually reflects true supply and demand as opposed to the government's market. But ultimately, they all come together. This is what an overnight reset looks like, right? And we've seen it over 4,800 times. And I can't guarantee tomorrow, but I really do think that if something has happened the same way over 4,800 times and we're doing the same thing, we are most likely to get the same result. Now, look, desperate governments do desperate things. So just using Venezuela as an example, what they do, they nationalize the gold industry. It's one of the risks that runs in mining, and we've seen it even recently in Ghana. And that was just in 2011. Now, Venezuela has had 3 gold resets, and you can see, or overnight resets, 2013, 2016, actually 4. And this one, over the last 5 years with new currencies, they just like to keep the name the same so that you think that nothing has changed when obviously everything indeed has changed. They just did one in October. That's just a few months ago. And even since then, gold is up almost 360%. And there are collectible Venezuelan coins. You'll have that in every country. Now look, I can't tell you for sure that they will or will not confiscate physical gold, but what I can tell you is I like to be in a position where it doesn't matter if I'm right or if I'm wrong. And that's what the collectibles really give me. And he talked about, the person that introduced me talked about my Uncle Al. I was 10 years old, and my parents and I were at his house, and he goes, "Come on, I want to show you something." So we went in the back bedroom, and he said, "If anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these vaults." And he had 2 floor-size safes in there. So I turned around to look. He could not fit one more 1-ounce coin in there. But they were all pre-33 because he'd go into these wealthy homes, buying antiques, and they would have gold, and they didn't realize its true value, and he probably picked them up for $35 or $50 or something like that. Now, that was 1964, when it was illegal to hold more than 5 ounces of gold, and here he probably had at least 3,000 ounces of gold, legally. And he could use it in the normal marketplace. So based upon the historic patterns, what I want is I want the kind of gold that I can use in the normal marketplace and it's legal. And so personally, I don't buy bullion. That's not always been true, and it may not always be true in the future. But at this point in time, because I know desperate governments do desperate things, just like we did back in 33, just like Kazakhstan did, okay, just like Venezuela did. You know, they look to gold, to real money, good money, to fund their shenanigans, right? And they don't want you to have it, because if you have it, then it's outside of the system, and you get to retain choice, and you get to retain control. So you just have to keep that in mind when you're looking at your own strategy. You need to be as independent and self-sufficient as you can possibly be. Because if you are dependent on the government, how many choices do you have, right? You have no choices. So I personally think it's critically important. And it is food, water, energy security, barterability, wealth preservation, community, and shelter. Because these are the things that we need to have to sustain a reasonable standard of living. I'm sorry, stocks run counterparty risk. Everything else, according to the Bank for International Settlements, only gold runs zero. It's the only financial asset that runs zero counterparty risk. You hold it, you own it outright. If your wealth is inside the system, it is very easy to take away. That's why even if you're going to hold that, you balance it out with this. And do not, I think it's interesting when people actually trust Wall Street and what they're showing you, because all they're doing is manipulating the price. Back in, I think, 2009, 2010, and I mentioned that this morning, according to the Bank of International Settlements in their derivative trading spreadsheet, fortunately I didn't know print screen then or I would have grabbed it, but for every 1 ounce of physical gold, they had created or were tracking 62,000 ounces of digital gold. Now, have derivatives gotten smaller? Those are just the big bets. Have they gotten smaller since 2009, 2010? No, they have not. They've gotten much bigger. So how much digital or paper gold does it take to have the price at $1,800, $1,900? And I can tell you absolutely, without a doubt in my mind, that when all confidence in this paper is lost, well, guess what? They take this garbage that has no value and they reset it, this is the overnight devaluation, against gold that is all intrinsic value. And it isn't intrinsic value because I say so. It is because it's used in every single sector of the global economy. It's just that simple. Therefore, it has the broadest functionality of any asset, gold and silver, broadest functionality, and therefore the broadest base of buyer. How often do you ever hear anybody talk about that? So people go, well, what would I want gold for? Right? You want it because it ensures your freedom and your choices. That's why you need it. And it diversifies a portfolio. So even with all the suppression, well, we have just recently had a golden cross, and you can see it right there. Now, I personally don't really give a crap about nominal prices, because all that does is put value in this garbage, right? And that's all this is absolute garbage that central banks can control using interest rates and their balance sheets. So all of this money printing. Now, I want you to think about that. Oh, I wish they could run out, don't you? Right? Now, you know they want to take us into the CBDCs, right? And they'll call it the digital dollar so that we don't know that anything has changed. But if you read the documentation through the IMF or the BIS, you know, and the big question for me is, well, what's going to justify printing all of this new money? And I hate to tell you this, but they're thinking about making it based upon transactions. So, oh, you want to buy a boat? Okay, new money will just be created to buy a boat. What kind of value do you think that money will retain? Absolutely, almost nothing, really. Okay? And I know you guys have seen this a lot, this kind of chart, where you can see the decline in purchasing power. This is official. This is according to the Federal Reserve Education Department. So we know that they modify their formulas so that things look the way they want them to look. And they're admitting that there's roughly 3 cents left of the value in purchasing power. I recently did a piece on the FDIC and the DIF fund, the Deposit Insurance Fund. If you guys have been watching me and you haven't seen that one yet, go back and watch it. Because they're basically saying the public does not need to know that they're going to be bailed in. They should understand that they're going to be bailed in. And people don't really realize. You think when you make that deposit that it's yours. It's not your money. You've now loaned it to the bank. And that justifies the bail-in. And they're sitting there laughing at the fact that the public has more confidence in the banking system and this garbage than the people in that room, which was the FDIC. So it's really a double whammy. Not only is the government money losing value at a really, really rapid rate, but even the little bit that remains in nominal value, they're getting ready to take it away from you. And so the biggest challenge that I personally have, and at this point in time, and this has not always been true, and I believe it will not always be true into the future, but personally, I don't own any intangibles because there is not one doubt in my mind but that we are at the end of this experiment's life cycle, period, end of discussion. But that also means that there are a tremendous amount of opportunities that lie ahead of us if you are in the right place at the right time with the right asset. I am a very strong believer in having the ability to identify the true value of any asset or instrument. And I believe that you need to know, is something undervalued, fairly valued, or overvalued? Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? Now you have to understand some nuances on there, and you can't count on Wall Street to tell you the truth because everything has just been turned into a trading asset. So how do you know what the real value of an ounce of gold is or an ounce of silver, right? It's really, and you don't have to be to the penny, just kind of get close. Now this, in this system, is created from debt. So you just take all the debt that's been created And if you don't want to really dig into the World Bank and all that stuff, use the US debt clock. That's easy enough. Or use the world debt clock. That's easy enough. But then there's a finite amount of physical. A finite amount. So just to make life easy, yeah, divide the debt by all the gold that exists, because when they do those overnight resets, what they're doing to some level, and nobody's gonna know what that level is until it actually happens, is they've gotta cover all that new money that they've thrown out there. If they were to do that today, you would be well above 15,000 an ounce. So at 1,800, 5,000, 10,000, it's a bargain. And you just keep accumulating. That's why I don't care what the nominal price of gold or silver on the spot market is, because we all know, admittedly, that that is a manipulated number, since a rising gold price is an indication of a failing currency. So they need you to think, oh, why would I want that? Oh, gold has barely done anything. Well, it actually outperformed almost every other asset, even in nominal terms, last year. But something interesting, we talked about the Golden Cross. This is the low-level numismatic collectible coins. And you can see the spike in 2089, but look at what's happened. We just recently had a breakout. So we've got the Golden Cross happening in the spot market, but this is the physical market that is true supply and demand. And we've got a great cup formation with a breakout. And you can see it more closely. This just goes back the last 10 years. So anybody that was holding those that bought them 10 years ago, which I certainly did, they're going, oh no, this is awful. Well, you know, I mean, it's all about perception management, isn't it? And if they can make you perceive what they want you to perceive, then you move forward in a way that they want you to. That's not really in your best interest. That's in their best interest. But let's take a look at what happened in the higher end. So the rarities. Now, these coins can go for many millions of dollars. And most people can't afford millions of dollars for 1 ounce of gold. But anybody that can afford that is likely either somebody that writes the laws or would have influence over those that write the laws. Because we do know there's different laws for different socioeconomic groups after all. And this broke out a long time ago. Not only did it break out, you didn't see the same kind of dip down on this graph that you did in the others. And I want you to see 70, 2008, there's the last 10 years. So that broke out a while ago. This is a leading indicator, because we certainly know that central banks have been buying more physical gold last year than they did for the last 52 years. And who knows more about how they are destroying this than those guys? And I do believe that you should always do what the smartest guys in the room on any given topic are doing for themselves. And I will say that as so many people go, oh, the premiums on the physical, this is your wealth insurance. And as long as you can position these, like when I buy my gold and I buy these coins, I just don't go above fundamental value. That's all. Because then it's just a waiting game. And I'm willing to wait because I know without a doubt we're at the end of this cycle. And we all have a choice here. But I do believe we're running out of time, because June 30th, I don't know how many, I don't have time to talk about this now, but there is a huge experiment that's going on in the transition from many, many trillions and probably into the quadrillions of dollars worth of contracts that have to convert. And when they ran the test in October of 2019, it was a big fat fail. And I'm telling you, it'll be interesting to see, and I could be dead wrong, but in my opinion, we're gonna have something really major happen, some kind of crisis between now and June, and I'm putting my neck on the line with this, but they can't make the transition, and that's the deadline they gave. I'm done.